Oh boy, we got some. Oh, whoo! It's mighty, mighty red there. Oh yeah, it looks like the Kraken has been released. Oh yes, the Kraken. I'm not sure if anyone has ever seen the movie called Deep Rising. One of my favorite movies. It's not like a horror movie, but it is about a sea monster out at sea. Phenomenal movie. I believe it was made 1999. I actually saw it when I was I believe I just broke puberty. Let's see. Deep Rising 1998. Never mind. I was 10 years old. I believe my mom snuck me into the R-rated movie, although it really wasn't sneaking on in. You can have a parent basically take you to an R-rated movie. But right now, it feels like the Kraken has been released in this market. Overall, the market is kind of a little twitchy, a little, I want to say, pissed off here. And that's a good thing. It's actually a really good thing. Why is it a good thing? Because ultimately, it means a couple things. Firstly, I love movies, like really big passion here. Ma! The meatloaf! The meatloaf! Hey, Ma! The meatloaf! We want it now! Wedding Crashers, one of the best movies ever. Will Ferrell has a very low-key part in this movie, but ultimately his, 5-minute role was the most epic thing on the planet. Owen Wilson, oh boy, drawing a blank of who else. Really good movie, check out. So, why is this good? And Will Ferrell did say, good, more for us. Yeah, that's right, more meatloaf for us. And also more, poontang as well. The entire movie is really about, partiers, per se. Used to be a very big partier myself, not anymore. Very much, not into the party scene, more so into the money-making scene. But we got a lot of stuff going on. So firstly, JP Morgan basically pretty much is, well, it's not really getting a good bounce off their earnings here. Their earnings kind of really came in very iffy here. I mean, overall, of course, JP Morgan, the largest bank, is still profitable. They're still growing. But, of course, they did miss on a lot of key aspects. No, I did not listen into their conference call per se. But I can go ahead and tell you the gist that one, JP Morgan, Jamie Dimon, is saying that there's going to be no rate cuts for 2026. And in 2027, we're going to see a rate hike. Yeah, can you think about that for a second? Like, what the... So there's no more rate cuts this year, but on the flip side, you also have potentially a rate hike next year? What? Aren't we going to be getting a new Fed chairman that's going to be politically aligned to the Trump administration that's going to cut rates? A lot of people actually forget that Powell was actually appointed by President Trump during his first term. And ironically, President Trump is bashing on the guy refusively. So is the Federal Reserve really playing politics or not? It's very much debatable. But why would there be a rate hike in 2027? That is very interesting to hear, especially coming from the biggest bank. So on top of that, we also got the CPI data that just came out. Or rather, right now it is 10:27 a.m., so it didn't necessarily just come out per se, but it's affecting the market here. So CPI year over year came in pretty much lined. Core CPI, this one definitely came in lower. Not to mention U.S. new home sales came in above medium forecasts. So I mean, overall, the market is just, or I should say the economy, it's not bad. That's the reason why we have SoFi following JP Morgan here. We have AMD's really an outlier. Going to talk about them momentarily. But you're basically seeing the major indexes here like just trending down, and the market's throwing a hissy fit because it signifies that, hey, there's no justification for a rate cut. And I've been talking about this a little bit more in the last, I want to say, couple weeks. And basically pretty much that if you go ahead and reward bad behavior in the stock market, it's the equivalent of rewarding bad behavior to a disobedient child. If a child is crying, making a lot of noise, and you give in and give them a lollipop, what's going to end up happening is they're going to continue to cry until you give them a friggin' lollipop. I'm not a dad at all, but I mean, I've been around the block for a while, and I do have common sense where if you reward bad behavior, then the perpetrators are going to want more rewards at the bad behavior. And that's what the market has pretty much like now done over the last year. The market is expecting rate cuts. And if it doesn't get a rate cut, it's going to go red. We just got data that's ultimately like pretty damn solid, but people are just like so stuck up about rate cuts. Now, can inflation skyrocket? That's another debatable topic, and I don't have all the answers. I'm definitely not God. I don't have any divine powers here. Water cheers. If you enjoy my content, definitely smash the like button and subscribe for more. We actually picked up a handful of new subscribers. We are at 70, on our way to 100. This is not my first time on YouTube. I actually run other YouTube channels. I just haven't talked about them just yet. Not in the stock market sector. I may be dragging over other viewers to here. So if you are a normal active viewer of mine, understand that we may get a influx of different kind of viewers. But ultimately, people that watch stock market videos, they're ultimately all the same here. But if you randomly see my videos go significantly up in views, that's definitely why. But to really talk about the future here, you have the Federal Reserve printing a lot of money. And a lot of people are really saying, well, the reason why we're at all-time highs on the major indexes is because the Federal Reserve has been printing money and Powell is essentially pumping money into the market to keep it propped up. The way the market continuously goes up is because of money coming in, buying pressure. You need buying pressure to go up. If you don't have buying pressure and you just have selling pressure, it goes down. So you need money continuously coming into the market. That's why our stock market is always going up. We just constantly have money. It is a rigged, demonic, satanic game. It is what it is. We're making money with Lucifer here, but it's all about what you do with your money. If you take your money, your hard-earned money, and you blow it up your nose, the devil's going to laugh in your face. And it's not the best thing to do. Been there, done that. Very much lived my immature 20-year-old days at nightclubs and raves significantly. And ultimately, it resulted in pretty much a spiritual ass whooping. But like I said, if you take your hard-earned money and you do a whole bunch of immature stuff, it's going to bite you in the bum. But if you go ahead and better your life and try to better the people around you, then you're going to be just fine. But there is a nature of this game. And right now, this game is going in our favor. I am a very big believer in buying the fear, buying the dip. If you are a long-term shareholder, I am a long-term shareholder in SoFi. I'll even say I'm a long-term shareholder in AMD because I plan on holding AMD into the late 20s. Probably 2020, maybe even 29, 2030, give or take, depending what they do. But if you experience this massive drawdown, you buy the dip and you basically buy the fear and you hold on to discounted shares of great companies, profitable companies. You buy the dip, and if you are a trader, well, then you buy the fear, you buy the dip, you sell the rip. It's a pretty basic game. But you can FOMO on in when the market's going down. Yes, you can go all in a little bit too early. You always got to nibble on in. almost 3 months ago. I honestly can't believe it now. I was nibbling on into this massive drawdown here. And I was also buying on this pullback here as well too. But you just nibble on in and you also nibble on out. But it's a pretty clear indicator that the market right now is just ultimately just pissed off. And the chances of us getting a rate cut, let me go ahead and pull that up. Actually, let me pull up another thing too. Actually, no, I just ended up clicking on this. Come on, Fed Watch. This website is slow as nuts because probably everyone is on it. We have a 2.8% for a rate cut in 2 weeks at the end of January. That's pretty damn funny. But look at this stuff. Look at this. Look at this. This matters a lot. Okay? Look at this. This data is going to be coming out probably, I believe tomorrow is going to be another 1 week. We are in a bullish environment. We go back 1 year, bearish environment. So the market environment for us has really changed. And here is another thing too. Now, even though this is all just nonsense, in my opinion, a lot of big traders on Wall Street follows this. And I mean, right now, like, we're not in a fearful market. The market is just pissed. There is a difference between being fearful and then there's a difference between being just pissed. Because the market sees the data and they're like, okay, we're not getting rate cuts. You want to know what? The economy is pretty damn solid. Let's go ahead and rally. This is a yes or no answer. Yes or no answer. If you are new here, once again, welcome. I am doing a Bung profile challenge, a public profile account challenge here. Looking to take this number to 6 figs. Not by gambling, not by doing anything ridiculous. Once the market kind of really sways off a little bit, probably going to be buying some leap options or maybe even some shorter term options. Don't really dabble too much into options. I've always made my money by straight, like, just trading, and also buying the dip on phenomenal companies, also growth companies as well. And, yeah, I got some uninvested capital, but guess what? 3 months ago in November, I was very underinvested. Very. I went all in on Liberation Day last year in April. I bought over $100,000 worth of stock. Hard cash. I do not do margin. I believe margin is bad JoJo. I understand that there are phenomenal success stories with people doing margin. It's not for me. I work very hard for my money. Small business owner of multiple small businesses. I'm also a newly published author. So I work very hard for my living. And I don't live outside of my means. And I just also make money. That is my strategy in the market. You can go from 5 figures to 6. If you are a bigger portfolio out there on this is basically pretty much like my baby portfolio. My biggest position on my private profile I've shown, it's a SoFi position, massive position, nearly 50k position, nearly up close to almost 300%. I was buying SoFi 2024 when it was hated in the $6 and $7 range. Unfriggin' believable. And what's actually pretty funny is that I was debating between SoFi or Robinhood, but because my main profile is on Robinhood, I chose SoFi, which I guess was, even though if I had started buying Robinhood, I would be up by close to maybe like 400 or 500%. But I really feel that SoFi for the long haul, with the vision that Anthony Noto has, is gonna be like the better option. All right, so for me, 3 months ago, I bought over $30,000 worth of stock. over 25K worth of stock on this profile alone. I was very underinvested in the market. And now I am very much like in a phenomenal spot. I have a plan for if this market goes down. I have a plan if this market goes up. If the market goes down, I'm going to be pulling over $5,000 to this profile to buy the dip even more. But the profile challenge is going to be 16 months. It's not going to be 18 months. Got to factor that in. More money is actually going to be flowing into this account. But once again, I mean, you got like, the big question is, are you aligned? And it is a yes or no. It is a yes or no question. Are you aligned? If you are aligned, you got nothing to really worry about here. And you just stick to your game plan. You work hard. And that's basically pretty much about it. Now, I did buy some stock yesterday afternoon. It really shouldn't be any shocker because I did talk about this in yesterday's video. I did buy a couple more shares of PayPal, 3 more shares added. What am I looking to really do with PayPal here? I could really see probably myself increasing PayPal to maybe a 5% position size on here. If you really want, like, my honest, really food for thought, I'm really being patient before actually accumulating some other shares of stock here. I really honestly was not aggressive buying Hood really enough. I would actually love my Hood position to definitely get above my Palantir size position here as well. I may even actually pick up some more Adobe shares here in the future if they just continue to trend down. But I mean, overall, it's fears. But here is going to be the big problem going forward in this market if earning seasons does not break this stupid notion that is really going on. Let's go ahead and say that we have my companies that I own here, such as SoFi. They got earnings coming out. It's going to be an epic big day. They're probably going to be putting up $1 billion worth of revenue. But let's go ahead and say that SoFi triple beats and their stock sells off. Let's say AMD. Right now, AMD just got a better buy rating. That's basically pretty much everything that I'm seeing. I'm not really seeing any news on AMD. I did a brief scan before hitting the record button. I could be wrong, though, but I will double check. Probably going to be talking more about AMD tomorrow. But let's go ahead and say AMD comes out with another phenomenal quarter. Lisa Su, she's a baller. She triple beats once again. They sell off. Let's see Palantir put up phenomenal growth rates once again. Maybe they don't come in with 68% of growth rates, but let's say maybe they come in with like 50 plus. Obviously, it's not 68, but it's above the previous 2 quarters. Because the quarter before this quarter, where they had 68%. 68 friggin' percent! 68%! And they sold off. If they come in and they beat that 68% number and they sell off, big problem. If Hood comes in, they beat and they sell off, problem. Meta. To be honest, I may actually accumulate some more Meta shares here. Running. It's, you know, I am really hoping that this market nosedives. I'm so sorry. I'm so sorry if you're watching me and you want this market to go up. I am so sorry. It just, oh man, there is so much money to be made here. So much money. This is friggin' silly and stupid. If Meta comes out and they go ahead and beat earnings and they are spending less money than they're generating, the whole reason that they ended up falling off a cliff is because they had record-breaking revenue growth, but they also were spending more money than they're generating. The market did not like that. But Zuckerberg keeps his word, and he said, hey, we're going to pull back on the spending. If they go ahead and put up phenomenal numbers, and they're like, hey, we're not spending massively anymore, and their stock sells off, problem. Adobe, like, give me a friggin' break. I listened to the conference call, triple beat, phenomenal. What the fuck? Like, why is this happening? PayPal, it is so oversold. This stock is oversold. Am I going to be a long-time shareholder of PayPal? No, I'm not. But I can definitely make a quick buck, definitely on PayPal here. Maybe this stock can rebound by 10-20%. Maybe I'll shed some profits, but there's money to be made. This stock is undervalued. It's undervalued on a fundamental analysis. It's undervalued on a technical analysis. It's under friggin' valued. It's undervalued. That's it. Honest company, they're going through a transformation. They are my only true risk on play, but still, they're profitable. They're just going through a transformation like process. They're getting rid of products on their balance sheet that is not doing well, and they're aligning to products that are doing well. Oh, wait, what company was that? 2024, that was SoFi. SoFi went through a transformation on the balance sheet. Okay, so if we get past earnings, if we go ahead and get past earnings, Nvidia typically is kind of a late bloomer here. If we get past earnings and the stock market continues to go down for the first quarter of 2026, it could very much mirror last year. Is that going to be great? Yeah, it's going to be a phenomenal buy the dip friggin' opportunity. Okay, the market is never going to go down forever. But why would the market continuously go down for no reason? The same exact reason it happened in 2018. I was not in the market in 2018. I got in the market during 2020 during Rona. But at the end of 2018, we had the market sell off like insanely for no reason. I remember I was doing my undergrad. I was in economic classes throughout 2018. I can't remember if I had micro or macro economics for the first or second half, but I actually had the same professor. And I remember that we covered the stock market because of the trade war. If this market sells off because of just nonsense, you mean to tell me that the Trump administration, with the ego that Donald Trump has going into midterms, is going to let the market sell off? They're going to do whatever it takes to get this market rock and rolling. The market is going to realize that we no longer need rate cuts. And the market is also going to wake up and realize that, hey, we've just been a crying, disobedient child. We just need to understand that this economy really is not bad. And sure, the data of the labor market is going down a little bit, but you also got to factor in with what the Trump administration is saying, and I do believe this, they are getting rid of government jobs. So I'm listening to both sides here, and this is where you got to keep an open mind. And of course, there's politics at bay. But I mean, if they're laying off people, it makes sense that it maybe will show that the labor market on paper is kind of hurting in a way. Now, could I be wrong about that? Oh, absolutely. Could the market just be ultimately propped up and maybe we really do need to go through a recession? That could be the case too. Maybe we are going to be in a recession 2026. I mean, the last 3 years has been double-digit gainers in the market. Maybe this year is going to be negative. My honest viewpoint and my honest opinion, I don't really believe that I'm going to have to transfer $5,000 into my public account here, because I think probably very soon, maybe at the end of the month, after Powell speaks, the market is probably going to be done throwing a hissy fit. And at that point, especially with SoFi's earnings, it's going to be a friggin' no-brainer. Now, what do I believe is going to happen with SoFi? Well, I believe in the management team. I put my faith in God ultimately, but I do believe in the management team. I don't put my faith in the management team. That's a big difference. I got my ass whooped in 2023 in the stock market. 2020, 2021, I made life-changing money, beyond multiple six figures of profits. 2022 did okay, not as good as the previous 2 years, go figure. 23, I got my ass whooped. I was actually in the red. 24, I came out of the red. Last year, once again, profitable, cutting a check to the IRS, have to. SoFi, I believe, has positioned themselves and have proven themselves to operate in a high interest rate environment because Anthony Noto is an innovator. And if the interest rates aren't coming down, SoFi did all this with very little of the interest rates that we have right now. SoFi was triple beating in a high interest rate environment. Give me a friggin' break. SoFi is going to be just fine. Okay? That's personally what I believe. If you have any anxiety out there at all, just take a step back, continue working hard. Don't let politics and don't let this nonsense really dampen your day here. And yeah, we just got to really be patient. We'll be back here tomorrow with a new video, more economical data coming out tomorrow. Maybe that's going to change the market a little bit here. Otherwise, take it easy, everyone. Like I said, if you enjoy this content, like it. Subscribe for future content. Sorry, but I don't really edit around here. I keep it real. And we'll see where this market goes next. Later.